This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. Yesterday, we saw a big move higher in the live cattle futures, and we were kind of writing about this in our daily research to clients, talking about a wedge formation pattern happening in the chart. So what we're looking at as a wedge is higher lows and lower highs. This typically leads to a bigger directional move, whether that be a breakout or a breakdown. Yesterday, we got the breakout of the wedge, took us towards the top end of the range. 111.45 to 112.25 is a key retracement on the year as well as the summer high. So this failed. The bulls failed to get additional momentum above here today, which is a little bit of a caution flag, meaning that we wouldn't be surprised to see this market retreat a little bit. There's been anticipation of higher cash, but really, I don't think it's going to go surging higher, and I don't think that the futures really have to catch up to it. At the end of the day, this market continues to trade in a range from about 108 to 111.5, call it, and there's no other reason to think otherwise until we get a new fundamental catalyst to give us that breakout or a breakdown. So right now, from the risk-reward perspective at the top end of the range, there's a good, I think, value to the short side. Now, that's not to say we can't go higher, but that's how we're certainly playing it up against that 111.45 level. Now, moving over to the feeder cattle trade, they have been absolutely resilient, much more resilient than I think anyone around here has expected. We're right up against the contract highs basically for October, bumping up here for the fourth time this year. It'll be interesting to see if we get this market to break out. We're in uncharted territory. Where do we go next? Well, the next psychological barrier would be 160. On the flip side, if we fail to break out, wouldn't be surprised to see a little bit of long liquidation. Take us back to where we originally broke out from a couple days ago, about 151, 151.5. Now, wrapping things up with the lean hogs all over the place, very volatile. We're trying to stay away from day trading the October contract. It's like throwing blindfolded darts. There's just not a whole lot of clarity. We're looking at establishing a longer-term long position in the December and February contracts, and we're using this with a combination of futures and options. Options, a great way to give you some long exposure with limited risk, leaving you kind of at ease as we go through this intraday and intra-week volatility. So that's what we're looking at to wrap up the week. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.